The regulatory framework. So in any financial reporting syllabus, the first phase of topics to be discussed is the regulatory framework. That is, why do we need someone to regulate the accounting profession? So why do we need the regulator? So that is just the basic things that the regulatory framework talks about. So before we go into details, let's look at the various need for regulator. Why do we need this body to regulate the preparation of financial statement? So there are various we need. The first need is that the financial statements are basically used by the third party in making their decisions. So if this financial statement is not regulated, then this third party that makes use of the financial statement that which are external to the business, they will be misled. So that is the first reason why we need someone to regulate, so that the external parties that want to review the financial statement, known as the external users, they are going to have more confidence in the financial statement that we are preparing. Okay, so that is the first need for regulator. The second one is that there is need for regulators to ensure that the financial statement prepared by a company in the same industry is similar to the one prepared by the other industry, meaning that all companies or all entities that are in the same industry are consistent in their preparation. That is, their financial statements looks similar. That is, similar transactions are treated in the same manner. So that is why we need someone to regulate that. Okay, for this transaction, everybody have to follow it like this, so that company A will not do his own different from what company B is doing. That is, if they are in the same industry, they must maintain the same standard. So this is basically for consistency and ensure that there is an adequate comparability. So that's just the second need where we need a regulator. Then finally, why we need a regulator is that we need a regulator so that management of a company won't just adopt what they feel like. That is, they will have to prepare an account in line with the laid down rules and what regulation. For example, now there is an IFRS, there is an IAS, which we are going to detail more in details. Okay, so the regulator will ensure that every entities are following the rules stated, not that a company prepares the account the way they like. So they have to follow in a guideline. So having discussed this, so the next thing I want to discuss is that what are now the sources of what regulation? What are the sources? What are the sources of what regulation? Now, basically there are three main sources of regulations. Okay, there are three main sources of what regulation. The first one is the accounting standard. This accounting standard is made up of our IFRS, our IAS, okay, our IFR, IC, and ISC, and finally our conceptual framework. So which I'm going to discuss everything in detail. So those are what makes up our accounting standard. Also, we have a company law. In Nigeria, there is a Company and Allied Matter Act of 2004 that currently governs the affairs of all companies in Nigeria. Then that's the second. The third one is that for some industry that are listed, they have a what? A regulator that governs their operations. For example, now for listing companies in Nigeria, we have a stock exchange. For banks, we have BOFIA. For insurance, we have NICOM. So all these other industries too, they have their own separate what rules. So meaning that there are three. We have an accounting standard, we have a company law, and we have some what listed rules for some separate entity. So these are the various sources of what regulation. Now let's discuss the various accounting standards. So let's start looking at all these things one after the other, just in a summary part, because they will be discussed in details. Like accounting standard, it will be discussed in detail. So these are just the statement of how some transactions and events should be treated in the financial statement, which have to be in line with the international financial reporting standards. So meaning that accounting standard, they are authoritative statements of how transactions should be treated in line with what IFRS. So that is what the accounting standard is all about. So how transactions should be treated in line with what IFRS. So that is, so all these things we are going to discuss all the IAS, IFRS as we proceed in this series. Okay, now company law. This company law is particular to different companies, meaning that the company law of Nigeria is quite different from that of Ghana, is that from that of South Africa, is quite different from that of US. So every company has its own peculiar law, and for the purpose of this course, we are focusing on the company law of Nigeria. So because they varies from one company to another, so this company law stated some rules and regulations that should be governed by, that govern the affairs of entities in Nigeria. So some of the sections of CAMA, as it relates to the preparation of financial statements, we are going to discuss them in a bit. Okay. Now the listing rule, like I said earlier, that this listing rule is peculiar to some entities. That is, all entities listed in the Stock Exchange of Nigeria, they are governed by the SEC Act. All banks are governed by the Bofia Bank and Other Financial Institution Act. Then all insurance are governed by NICOM, that is Nigerian Insurance Commission. So all these rules, all these companies have their own separate rules. So that is what makes up the listing rules. Okay. So now let's discuss. So let's now go into details by looking at some of the section of the CAMA as it relates to to financial statement. First, the objective of financial statement is just to provide information about the financial position and performance of the entity, showing that the account prepared shows the true and fair positions of the entity's operations. So that is just the objectives of financial statement. So now, so what are the basic principles of CAMA as it relates to the financial statement? What are the salient points of CAMA as it relates to financial statement? So now let's look at some of the sections in CAMA, so that we can have a better understanding on how financial statements should be prepared. So first, the section 33(1) of CAMA guide us on how documentation should be kept. That is how we are going to keep our accounting records. So that is governed by the section 331 of CAMA. And this section says that every company shall cause accounting period to be kept. Okay, the accounting record shall be sufficient to show and explain transaction of the company, and shall be explained to how to disclose the reasonable accuracy, enable the director to ensure the financial statement prepared compliant with the act. The accounting record must contain entries. So these are just basically about the accounting records that must be kept. For example, now it says that it must contain a day-to-day basis of all money received and expended by the company, and in respect of which receipt and expenditure take place. Also a record of asset and liability of the company. And if the business of the company involves dealing in goods, the accounting record shall contain statement of stock held at the end of each year, which is the closing inventory. So these are just like the summary of the account. So which CAMA is also telling us that, okay, you have to keep this record once you are a registered company in Nigeria. So all these things are just a record, which basically the one we have in the IFRS and IAS, override all this. Okay, the laws in IAS and IFRS override all this. For example, now CAMA is still reflecting to balance sheet, but meanwhile it is now known as statement of financial position. So CAMA was referring to balance sheet, but it's now known as. So the law we have in IFRS and IAS override what we have in the CAMA. But in case we don't have any transactions or specific rules in IFRS and IAS, then we have to follow that one stated in the CAMA. So what we are just doing is just basically for knowledge purpose, at least how have we been doing it before and how are we going to do it now. So those are just basically of what we are doing. That's why I have to go through the CAMA, some of the sections here. Now, also the section 334 places the duty on director. So meaning that it is the responsibility of the director to prepare the financial statement, not that of the accountant. So it is the responsibility of the director. That is according to the section 334 of CAMA. And it says that the accounts must contain the following, such as the statement of accounting policy, a balance sheet, which is now known as statement of financial position, a profit and loss account, which is now known as statement of profit or loss and other comprehensive income, notes to the account, auditor's report, director's report, a value-added statement. In IFRS, value-added statement is not really a component of financial statement again, but it can come like an additional information. A 5 years financial summary. So all these things are just additional information that comes at the end of financial statement. So these are like the basic requirements of CAMA on directors in the preparation of financial statements. Now, so section 335 of CAMA now says that, okay, that financial statements must comply with the requirement of the second schedule to the Act with respect to their forms and content. So this section continues to say that financial statement must also comply with accounting standard laid down in the statement of accounting standard. You discover that this SAS is no more in practice, but Kama is still referring to it. So what we are now using instead of this SAS is our IFRS and what IAS. And this SAS was then being issued by who? By Nigeria Accounting Standard Board. So this Nigeria Accounting Standard Board has been scrapped. We now have Financial Reporting Council of what? Nigeria. So this Financial Reporting Council of Nigeria was established in June 2011. And they were basically established to replace the Nigeria Accounting Standard Board. And effect, also immediately they scrapped this NASB, that is NASB. They also scrapped all the standard being issued by NASB. That was when we now started the process of complying with the International Financial Reporting Standard. So which we are going to explain more better when I'm discussing the roadmap to IFRS. Okay, so now the standard setting in Nigeria. Then prior to that June 2011, all accounting standards in Nigeria were being set by Nigeria Accounting Standard Board, NASB, that is NASB. They are responsible for setting the standard in Nigeria then. But now that we don't have NASB again, so meaning that Nigeria, we are no more setting the standard. We are no more setting the accounting standard now, because now that we don't have standard, Nigeria no longer set the accounting standard now. So basically what we now do is that we now adopt the standard that has been set from the IASB, that is International Accounting Standard Board. So they are the body that set this IFRS, because before we are the one setting our SAS, but now that NASB has been scrapped, FRCN that we have now don't set accounting standard, but they only do the monitoring and controlling the entity in the adoption of what? International Financial Reporting Standards. So all these we are going to discuss them in brief when we are discussing the roadmap and the composition of what? FRCN. So I'm going to discuss them in brief. Now, so let's discuss this FRCN now. FRCN, known as Financial Reporting Council of Nigeria, was established in 2011, that is in June, to replace the Nigerian Accounting Standard Board, that is our NASB. This FRCN was set up to replace what? NASB. So this now resulted in the scrapping of all our statement of accounting standard, that is SAS. So what FRCN now does is that they now serve as a federal government parastatal, and they are being supervised by the Federal Ministry of what? Industry, Trade and what? Investment. So these are the body that supervise the affairs of what? FRCN. That is, FRCN reports